There's Thursday, the 20th of April. Market analysis, Stan Ehrlich. Good morning. 9:55 California time, just before 10 o'clock. Hair past the middle of the day. You know I start out with the stock market indexes, specifically the S&P 500 Spider, also the DIA Diamond, and the QQQs. And then I go on to futures, sometimes forex and sectors, depending upon if they have particularly interesting signals, but always futures and the indexes. Now, you can always reach me at info@ersignals.com. You might even ask me to bring in a particular symbol of your interest. Now, we've got almost high and last at the moment. The market is rallying this morning so far after opening significantly lower. Significantly lower to me means it challenged the low 3 days ago. Almost exactly the same price. In fact, I think I got one tick below the low of 3 days ago. No big deal. And it's come back up to close the gap, meaning back up to the low of yesterday and some more, but we're still lower by a point, which is not very much. Again, this market, I think, is topping out short term, very short term. And I am looking for a move down to about 396.5, 7 to close a gap and then return to the bull trend. I do believe we're in the bull market of 2023. And it did start on October 13th, the low day we caught with my signal ER signals. We had a bullish engulfing oversold condition that met my criteria, and my automated trading system turned the price action green real time, and we were long real time from almost exactly 359.90, below 360. And that was our initial long for the beginning of the bull market. Now, overbought recently. 2 sell signals for the S&P, actually 3 for the DIA, we'll see in a moment. And none of them have really kicked in very well, except the DIA so far, but it's only the second day after the bearish engulfing in a moment. So what we need is for this market to stop rallying approximately where it is right now. Even if it gets a little bit higher on the day, it can't, I don't want it to, it shouldn't get above yesterday's high. And there's not too much room between the close of yesterday and the rally high. Anyway, unless it does that and then turns back down again, that would be extremely interesting. That would generate a new major red ER sell signal. Again, if you manage to get above yesterday's high and then close below yesterday's close, we'd have an outside down day within the reasonable length of time from being overbought, and that generates my new sell signal. I don't expect that to happen. I don't think that's going to happen. That would be very far-fetched. I've seen it, but it's once every 5 or 10 years, something very rare. Now, so I think it's going to stop right around where it is. Let's go to the DIA. And 2 days ago, we had a red bearish engulfing ER sell signal, period. It's the third in approximately 2.5 weeks or so. The first 2 didn't work very well or at all, probably not at all. It depends a little on where you want to put your stops and how you want to handle the signal. But our canned trading system has exact specific rules, and I can tell you it lost a little bit of money on both those sell signals. This one is working perfectly. So far, we are now have been lower than the previous 4 days, including the day of the bearish engulfing, of course. And we are staying lower on the day so far. So I've got no problem with this rally. It's getting a little bit uncomfortable, let's say. I have no orders that I've placed that are hit. It's just it's making a little bit of money, a lot less than this morning, but I expect it to stop and turn back down again very soon, just like the S&P, of course. And let's go to the QQQs, which are now almost unchanged. They didn't get down all that much. They came back up more quickly, and they are now the first one to challenge the unchanged level We're still down 35 cents, not much certainly on the DIA. And the spider has made minor new highs here. It's still down 80 cents. So overbought conditions recently, I mean very recently, on a 1-minute chart indicate a possible high, and it worked for a few minutes. That's about it. We'll see. I don't change any of my opinion whatsoever. This could be a great spot for a potential short sale. You certainly got less of a risk, a smaller loss if that's true. Let's go to futures real quick here. All right, so the E-mini is obviously something I just talked about in the indexes, and it's getting close to the unchanged level. Next chart, but I think it's going to stop and turn down. We have the interest rate futures, and I have a little alarm going off. I'm going to make sure it doesn't keep bothering me. Interest rate futures are doing what I wanted. We have come down. We tested that support level very accurately yesterday in the long bond, 30-year long bond, US symbol. And now we're rallying quite nicely. Just the beginning. If the low of yesterday holds, and it certainly looks like there's a good chance of that. Remember, I am of the opinion that we are building a bottom long term. So I'm definitely in favor of looking for buy signals around support levels and other reasons to believe the market might turn back up again. So I watch a little more closely for signals. We got very close to oversold, not quite, too bad. There was no bullish engulfing involved in this turn so far yet. But, one day up doesn't make a bull market. 6 months or, a few months or more certainly does. So getting above 134.5-ish on a closing basis, and let's see another little bit of strength the next day, it would be very convincing for a longer-term major bull trend line being flat horizontal resistance line being broken and the beginning of a longer-term bull move. I'd like to see that very much, and I'm thinking it might take another several weeks, a couple of months, maybe even a little longer, but not into the summer, let's say. Now, the same thing can be said, of course, about 10-year notes. And here it's the TY 10-year notes. It held support very nicely, not quite as accurately as the bonds, but very close. And we're up quite a bit, as you would expect today, as well as the bonds. And it came not quite as close, but kind of on the oversold levels. So it's trailing along just fine. Same comment applies. If we get to close above the new highs for several months here, I would turn major bullish on interest rate futures, period. Next chart. Crude did stop at the resistance area I talked about a couple of weeks ago in overbought conditions. Go listen to the video and watch it, of course. Now, it's the second day down, closing the gap I talked about a week or two ago. And the gap is now almost closed. We need to get down to the high of the day on March 31st. That price was 75.72. So 75.72 on the downside here, a couple of points lower, would close the gap. Also, where's RSI? 32. I like to see 25 or lower. 30s Wells Wilder's original oversold levels. Most people see that it's the default levels in all the trading softwares I'm familiar with, which is a few. So, and I learned RSI directly from Wells Wilder himself. It's quite possible, depending upon how fast it gets down, if, of course, it completely closes the gap. And it can go further, by the way. Going further a little bit, maybe down to 73-ish, is not going to change the longer-term picture. That is still a significant area of support. In fact, I've got to include everything down to about 71. I doubt it's going to get that low. But you're about to turn back up again in the last few days, and the long-term trend may be in the process of changing. I can't tell yet. Next chart. Heating oil. Got oversold today, first time in weeks. Don't chase a market down if it's already oversold. Likely to turn back up. We're in some support area, not particularly the most accurate, but being in a general area of support and oversold definitely implies it's going to try to turn back up. The problem here is we've had some really great, not the fact that we've got really great sell signals on the ER sell signal, the top of the market period at that point in time for months before and afterwards, 2 days from the highest high at the very top for a whole damn year, and the top of the damn rally high that was back on June 17th. All of them had bearish ER sell signals involved. Whoppers. So we might bounce, but I am longer term bearish. I think these two green horizontal lines I've talked about frequently are going to get broken. When they do, ouch. Look at the air that we've got underneath that green line. There's just plain air. The last time you were down there was a year ago, almost exactly. That's a pretty significant top, including, what do you want to call that? A lopsided head and shoulder top? Maybe. A double or triple top? Maybe. But you could certainly see the sideways trading range and support. And if that goes bye-bye, next chart, natural gas, bouncing above and below a little support line, resistance line, support line, bang, back and forth, and the last couple of days. I'm going to wait a day or two to decide what's happening here, but I'm definitely bearish, and the trend is down, and we're not oversold or close to it, or overbought for that matter. So it's very neutral territory. Next chart. We've got this gold market sideways for a little bit, but the bottom we picked in to the exact day in all three precious metals, all three of them. Gold bottom out on a green ER buy signal, and the date was February 28th, point blank. We just saw a new high for the whole darn trend a few days ago, the beginning of the week, or the end of last week. Next chart is silver. Got the exact bottom of the move, a little tiny double bottom over a 3-day period, and it was the lowest low by a fraction, and up we go, boom, bull market. New highs for the whole damn trend a couple of days ago. Trouble. We've got 3 sell signals lately. Now, and if you're still in a bullish position, a long position because of a buy signal, and you're not stopped out yet using our STS, smart trailing stop, then new sell signals do not get you out of your long and or go short. You have to get out of your long because you got stopped out. Now, if you get a new sell signal and you're stopped out, you're flat, we say, that's the signal to go short. So the question is, did you get out of your long position from the very bottom of the market? Are you still riding this wave up? It's been so steady and so strong and so damn consistent, it's ridiculous, until a couple of days ago. So the answer would probably be no, unless you raised your stop, obviously, too quickly. We may be turning down. This last sell signal is working perfectly well. We did even the next day get back up into the retracement area that we go short for an ER3. ER1 has gotten short well before that, and it's a little lower on the day. During the next few days, I'm looking for new lows. I'm looking for a move down to and below 24.63, whatever. So I don't want to see any more strength, period. Next chart is platinum. Hey, new highs for the move since our new long ER buy signal on February 27th. Today, new highs and a whopper of a move. Not quite as consistent as silver, but still an awfully good bull move. So again, my system is flexible enough that you can change the rate at which the trailing stop moves. It's not a moving average. It includes a variety of other tools. It's a smart trailing stop, not a dumb one. Next chart is live cattle. Hey, hey, hey. We had that new bearish engulfing sell signal yesterday. So today is the first day after the sell signal. Now I am looking for this rally to stop. It's already gotten up to our ER3 sell signal level and a little bit further. So this would be a prime area to consider a potential short sale. This is not an official recommendation. Remember, I'm not supposed to do that, but hey, I had a broker's license for 30 years. I know what I'm supposed to say and not. So I'm going to be ambiguous about it because I feel better about that. But darn it, My system sold it short where the red dot is, and you already know that. So, and my trailing stop is so far at 65.95. So that's my risk. And as soon as it starts slipping, assuming it will, then my 165.95 is going to start coming down, and it's going to start coming down using an algorithm that I wrote. And it's been way over 10 years in developing. And it won't be 165.95. Maybe today it'll start sliding back down. Remember, the system's already short, losing a little bit at the moment. Next chart. High grade copper. Not sure what it's going to do. Sideways, neutral. Obviously, the trend is basically up. Let's watch for some new highs and see what I can come up with. Soybeans, kind of the same thing. Looks like it's trying to top out. I'm not real sure about that. Last buy signal a couple of weeks ago worked for a couple of days, and that was about it. Next chart, soybean oil, same kind of comment, although the major trend here is basically down. Corn, what are you going to say? Big sideways, up for the last couple of months, but kind of sideways to down if you look over 6 or 8 months. Next chart, wheat. Definitely the long-term trend is down. Every few months you have a lower low and a lower high. That's the basic definition of a trend over some period of time, and you've got to be specific about that. Do you have every so often, try to be specific about that, lower lows and lower highs? That's the bear trend. Okay. Next, soybean meal, bull trend. And again, for almost a year, specific amount of time, the lows have been higher than each other, the prominent dominant ones every several months, and the highs have definitely been higher than each other every couple of months or so. All right, bear move in live hogs, obviously in bearish. Haven't got any great signals lately, so looking for lower levels. OJ got terribly overbought, did have and still may be having a minor downside correction. There's room for it to come down a little bit more. I don't think this is turning into a bear market. I think we should get some reasons to be a buyer if it slips off to about 261 or maybe a little bit lower, especially if it's in just a few days. Next chart. Cocoa, getting close to the end here. Bull market, no particular comment, looking for higher levels. Sugar, whoa, we are getting extremely overbought again, making new highs in price, but not yet in the indicator. Now, at the moment, people could say that would be divergence, although we haven't turned down in price yet. So if that happens and we start slipping below today's lows, for example, and the oscillator doesn't make a higher high, that would be divergence. And that's kind of a sell signal. But I certainly wouldn't be a buyer. No way. And I'm real tempted to be a little more blatant about potential short sales. Next chart, we're back to the S&P 500 E-mini, and we're seeing the market still lower on the day, except for the QQQs are up 30 cents. But just because they're up 30 cents, it doesn't really change anything in this situation and most situations. One last thing, forex, the euro dollar. We had a sell signal on the 14th of April. We had a sell signal yesterday again. Euro dollar momentarily is up a little bit, not too much, and it did get above yesterday's high. So that sell signal yesterday is kaput, broken, done, didn't work, lost a little money if you took advantage or tried to of that sell signal yesterday. But the sell signal that so far is the high of the move is in okay situation. I expect to see a new low for this move down below the horizontal line I've got there, 1.09049 soon, without going up any significant amount more. Today's high could be the short-term high. The big sell signal at the top of the market so far is not having any kind of major problem. Next is the end here. We're still down 60 cents on the spider, only 22 on the DIA cents, and up 40 cents now in the Qs, 50 cents almost. So they haven't really turned down, but they haven't really gone up much. I leave you with that. We'll see what happens every time. Have a great day.